I want you all to be really careful with what's going on in the market right now. Okay, so because interest rates are ridiculously low, and a lot of people have cash in their pockets from stimulus checks, etc. People, for better or worse, have been investing in IPOs, and there's going to be a lot more IPOs coming up this year. So I want you to be careful. I want you to do your own work, and I'm going to teach you how to do your own research as well when it comes to initial public offerings. It's also referred to as going public. Yeah. So I want to show you this here, and I guest lectured in my son Dylan's class, the guy in the middle here. He's a bit older now. He's 11. I guest lectured in his class over Zoom yesterday on stocks, and I was teaching them how to do research on companies and how to think long term. And so I use this prop. Now, this is historic, and of course, like all my other props, I bought it on eBay. And if you ever want to give a presentation, buy props on eBay because people will remember them, and then sell them back to eBay after your presentation. And what happened was back in 1999, the internet bubble was in full force. Right, there was a bubble, like there's a bubble now in several markets, but the internet bubble was in full force. And this company, Pets.com. What they did was they spent a fortune on marketing and crazy Super Bowl commercials, and they created this puppet. And it was ridiculous because this company, what they did was this company did was all they did was they competed with Amazon online when they sold pet foods and pet supplies. But it was ridiculous because this company wasn't profitable and the long-term prospects were awful as well. Yeah. So anyway, eventually he declared bankruptcy. So before anybody invests in an IPO, and again, there's going to be a lot of them coming up this year, what I want you all to do, please, is to read what are called the S1 filings. Okay. Now, the S1 is just it's geek talk, accounting talk, and finance talk for the investment offering. Don't ever invest in anything, any product, any stock, any bond, any, ETF or your friend's company without reading the investment offering first. Okay. You have the right to read this. And so what happens is when a company goes public, the investment bankers that work at big firms like Goldman Sachs, Morgan Stanley, UBS, etc. The investment bankers work with lawyers to create these documents. And these documents are great because they tell you all the risks of the company as well, all the material risks. Okay. So I worked at Goldman back in the late 90s, and I got some shares in the company, not many because I was a grunt. But this here was the IPO prospectus for Goldman Sachs. Okay, it listed all the risks. But what I want to do today is I want to really quickly go through this one. Okay, so in 2012, Facebook went public. And so the investment bankers on Facebook, which in the IPO syndicate was led by Morgan Stanley, it was a disaster IPO. And I'll talk about that why in a second. But they created this document. And so I want you all to read documents like this before investing in anything. Okay, so especially stocks. So let me show you how to get this and how to get the investment S1 prospectus for any company on the US markets. And the process is similar overseas. So what I'm going to do is I'm going to go to sec.gov. And then I'm going to go here to company filings. Okay. And I'm going to show you where I got that Facebook prospectus from. Okay. So here you type in the ticker, FB, Facebook. Okay. Right here. And by the way, the only way for you to know if a company has filed to go public is if they file here on sec.gov. So if there's a company you're looking at and you're like, gosh, when are they going public? Or have they filed to go public? Enter the name here. If you don't see an S1 come up though, they haven't filed yet to go public. So let me click here on Facebook. Okay. So right here, these are all the financial statements for Facebook. And on the right side here, you got the 8K. And basically that means an earnings report or an important report as well. Okay. And this is the earnings report. This here is an annual report, the 10K. And then there's something called the 10Q, which is quarterly reports. But you can also get what's called an S1. So what you do is you go here to filing type, S-1. Okay. And what you'll see here are the S1 filings for Facebook. Okay. And this was the first one they filed. Okay, they filed to go public. They usually do it a couple months before the IPO. They filed it in February of 2012, and then they made amended versions. And the amended version I have in my hand right now, you can't see it, is this version here, okay? And so if you click on this here, what you can see is you can see this entire document that I had in my hand, okay? And it's called the Prospectus, okay? And it tells you all about the company. And it's a very, very long document. Now, this IPO was led by Morgan Stanley, okay? That was the book runner. And then also Goldman had a big stake in it as well. So top left is always most important, top right, second most important, middle, third most important. It was a disaster of an IPO though, because it crashed on day one. And I'll tell you why in a second, okay? But what you can do is you can look through this entire document to learn more about the company, including who's the management, what do they get paid, that's right. The use of proceeds, meaning from the IPO, what are they going to do with the money? A letter from Zuck, and financial statements, and much more. In fact, you can just do Command or Control F and do a search on the word risk, and all the risks come up here. There's 72 of them mentioned here. Okay, so you got to read these things first. Now, the reason why this IPO was a disaster is if you'd read the filing here, and I read it as well. You would have learned that Facebook did not have a mobile strategy. And mobile is the new desktop, of course. But back in 2012, when you used Facebook, you had to go to a browser on your cell phone. It was ridiculous. And that's one of the reasons why they failed. And you could have searched for the word mobile in here and uncovered that risk as well. They've since created a mobile strategy, which has been very successful for them. Not ethical, but successful. But anyway, the bottom line is before you ever invest in a company, what I want you to do, please, is read the investment offering or the IPO prospectus. Okay, it'll stop you from hopefully getting scammed.